Australia is heading into a recession. This is going to be a reenactment of what's happened in COVID because COVID stopped supply and ramped up prices and created inflation. We're going to have a slight dip in property prices like we did in COVID. If you don't pay attention, you'll miss it completely. And then we're going to have a ramp up again. It's going to go up. It's going to be hard to not get into that recession next 90 days. And the fact of it is, there's going to be some people sitting on the sidelines watching the news and doom and gloom everywhere. It's terrible, it's scary. And then there's going to be the people that continue on and keep building their dream one property at a time. And they're going to be the winners out of this. Hello and welcome to Positive Property Show. Tonight's topic is Australia is heading for recession in 90 days. Hi, Christina. Welcome.
Good afternoon, George. This is a depressing topic, but at least we've got 90 days to prepare and get ready by the sounds of that.
Yes. Now, if everything goes the way it is at the moment, we're going to be heading in recession in 90 days. But what I want to talk about is not only why we're heading for a recession, but also what does it mean for you as a property investor? Because that's the important thing as well, right? Because basically the economic cycle with the world, with Australia, it goes through seasons, right? Let's say you've got, summer when it's really good, and then you got slowing down, which is autumn, then you got winter when it's negative, then you got spring, and then you got summer. Now, always after summer, there's an autumn, and after autumn, there's a winter, and after winter, there's a spring, and after spring, there's a summer.
So it's always going to come back around like a circle.
It's always going to come back around, and it's in cycles. And what we need to realize as investors is that there's the market's either going up or it's going down. It's got its different seasons, but also interest rates have got their own cycles as well. They're either going up or they're going down, property price going up or down. So there's a lot of macro and then micro factors involved, right? And what happens is people get overexcited and greedy when property prices are going up.
Of course.
And then when we're heading into recession, people get fearful and they've got fear, right? And the thing is, fear and greed are not good emotions to have when it comes to investing.
They're always the extremes that people seem to exhibit. And I feel like a lot of people have also got that herd mentality. Whenever people are panicking, it creates more panic. And it's just, this never-ending cycle that perpetuates itself almost.
It does. And what we've got to do is we've got to take off our emotional hat and put our investor hat on. And when you put your investor hat on, total peaceful. Imagine like sitting there like a monk. Is that how they sit? Like that, right? And I like that. There, and you got your Dave Asprey glasses at the moment, which is really cool. Because I remember when I was in London, I had dinner with Dave Asprey from Bulletproof Radio, and he was wearing those glasses, true to form. Really cool guy, really smart man. So there's seasons, and what it comes down to is this. And I'm going to go through all the facts and figures in a minute because there's a lot going on at the moment in the world. We've got the Strait of Hormuz.
That keeps opening and shutting, and we've got wars happening.
Well, exactly. And we've got the Middle East war at the moment, which is affecting a lot of stuff. And there's a lot going on. And people panic when a lot's going on and get scared. And the thing is, what needs to happen is one thing. You got to get down to the principles and really follow the core principles of investing. Because there's money to be made, whether there's a recession or not. Because in Australia, there's 15,000 markets, all got their own little property clock going up and down.
There's always going to be opportunity whenever there's a crisis.
That's right. And when there's no crisis, there's opportunity as well. And when things are going well, there's opportunity. When it's going bad, there's opportunity. And with our strategy at Positive Property, right, the strategy I'm using is what all the richest people in property have done. Because if you look at Australia, there's a lot of people that came in from the Balkans, from Greece, Macedonia, Italy, and those areas, immigrated in Australia. And they were really old school. What they did is they accumulated property after property after property and became very wealthy with the long-term gain, right? Because you got lots of different people talking about different strategies. You got flipping, you got NDIS, you got multiple rooms, and you got renos, and you got development, and there's all these different strategies, Airbnb, lots of stuff, right? And when you look at all of them, The real one that really works is the old basic method of buying a property and holding it long term. Because the long term, that makes your money. That's what
Simple,
makes
but
your
it
money.
works.
Yeah, it's very simple, not
Simple
exciting.
yet effective.
Look, it's not that exciting. It can be exciting because when your property goes up, it's exciting. But really, it just sits there and does nothing, right? Not nothing, it grows, but you don't really get that involved, right? And what amazed me is people want excitement sometimes. You know what I mean? Like it amazed me that I remember we had these clients and they bought a property and they ended up selling it to buy a business. Remember that? And
Mhm.
what happened was that property now has doubled, but they spent their money, bought a business, went broke, and now they've got nothing. And you know, I feel sad for them because
That's
they
the
wanted
risk
to.
you take when you're doing a business.
Yes. And if they just kept that property, kept their jobs, and did nothing with that
Yeah.
money, they would have doubled it. But instead, they got it and worked really hard, quit their jobs, and did that. And the thing is, I'm not having a go at people having a go, right? I actually want to encourage people that want to start their own business, do something they love. But you've got to do it from a position of power, right?
Mm.
And what I say to people is this: if you haven't done this already, this should be your number one goal. You know what that is, don't you? Replace your income through property.
Yeah.
Because once you replace your income through property, then you can go do those stupid things,
And once you've
or
got
smart things,
multiple
or passion
properties,
things.
then you've
Yeah,
got
well,
enough to leverage and play around with because you've got a safety net of having so many properties that you can afford to do those sorts of things.
exactly, exactly. And
But if
so,
you've just got one or two, it's a lot riskier.
yes, that's right. And if you get a property portfolio, then you're bulletproof.
If you've got 10
Then,
properties and then you
then
sell one to do a business, it's like neither here nor there. If it works out, great. If it doesn't, you've still got nine other properties that are supporting you long
that's
term.
right. And wouldn't it be a great position where you can sell one property and it doesn't matter? You can just
Yeah.
sell this property for $1 million, take the equity out, and it won't make any difference to you
Just for
because
the
you've got
fun
another
of it,
property.
you could go start a business just for
Well,
entertainment purposes.
well, that's the best way to do it. You know what I mean? Find your passion, right?
Yeah.
If you want to find your passion, that's the way to do it.
Use
So
property to fund that dream.
exactly, exactly. And that's what you should do. So that all said, what I'm going to do is let's start the PowerPoint. Let's talk about what's happening in the world and what's
Oh,
happening in
we've got
this
a prezzo
recession.
tonight. I'm excited to see some stats actually.
Yes, well, this is my
Because I'm
weekly.
watching the news every day, I must admit. It's a little bit addictive with what's happening. It's so crazy the world
Okay.
right now.
So great picture. Recession in 90 days. What it means for property.
I've got 90 days to buy as many
We
properties as
both
possible.
look very concerned there. We look very concerned. Okay, what we're covering tonight: Strait of the World, Trump, RBA, building material inflation, supply collapse, what it means for investors, and some real people, real results. Okay, let's go. State of the world, the macro factors driving Australian property. Okay, so the oil crisis. The oil prices rippling through global supply chains, and basically every part of our society depends on diesel and depends on transport, right?
Mm,
Fertilizer, oil, plastics. So there's a lot of knock-on effects, but the oil crisis is creating a lot of inflation.
that's what we're seeing worldwide.
Yeah. Now look at this. So the Strait of Hormuz, right? A lot of people rely, a lot of countries rely on fertilizer coming from the Strait of Hormuz, right?
Wow. So
So
we're
look
the
at this.
third highest.
Yes,
Wow.
right?
That's a
So
lot.
now this is the deal though. If you don't get fertilizer on time when you need it, planting season. So this is what you need to plant. To plant, you need fertilizer. You also need diesel for the tractors and everything else like that. And obviously you need water too, which we've got. So without the diesel and the fertilizer, if you miss the plant, then you got 12 months of food shortages. That's a long time, right? And it's amazing that Australia, we rely on 32% coming
Which
from the
is a
Strait of Hormuz.
huge percentage. Yeah, I'm shocked it's that
Well,
high.
you look at that: Sudan, Sri Lanka, Australia, United Republic, Tanzania, Somalia, Pakistan, Thailand. Well, Pakistan have brokered a deal at the moment with Iran and America. No wonder they want to get their fertilizer. They're like, we need this, right?
Yeah.
Consumer confidence is collapsing. So inflation is sticky. Petrol's climbing. The RBA has got a catch 22, right? They cut rates, inflation stays hot, and the currency weakens. hold or hike and mortgage holders get crushed. So what do? They're really stuck and they don't know what to do. I know what I'd do if I was them. You know what I'd do, Christina? I'd cut rates a little bit. Just ease them down a little bit. Not overboard. Go down. What they need to do is just slowly get that.
That
Get that.
would bring back more confidence in the market and have people not being so tight with hoarding their money because they think it's all doom and gloom as well, because you've got to keep that money circulating.
Yeah. So the RBA, they're pricing a few more rate hikes this year. They reckon it could become an 18-year high if we
Wow.
get a few more rate cuts. That's what they're factoring in. Now, I am going to say contra to this, that I think if we hit a recession, then guess what's going to happen?
They're going
They're
to
going to
have
be
to
cutting,
start cutting.
they're going to be cutting rates. Exactly.
Yeah. They'll have no choice.
Yep. Now, look at this. Building a house just got $35,000 to $50,000 more expensive,
Wow.
right? That's what they're predicting.
Mm-hmm.
That's because of the Middle East conflict, the tariffs, and everything else. So
Supply
this is,
chain for everything.
well, yes, that's what they're saying. That's
Yeah.
pretty huge, right? So what does that mean? Well, if this crystallizes, and this is what economics are factoring in, and the fact of it is, oil prices have dropped already since they announced the ceasefire. So this all may not happen. This is worst case scenario if they don't
Wow.
open the strait, right?
Mm-hmm.
But at the moment, they've got a ceasefire. They've limited the opening. They've got 2 weeks of a ceasefire. So if this holds and they do a deal, then this is not going to happen. But if they don't do a deal, this could well happen. And I spoke about this a couple of weeks ago, where Reece Group building material prices up 30% just with Reece, right? They're the plumbing and building supply company in Australia, right? Now, I think they were very quick to do this. Like the Strait of Hormuz was closed for a week, and then suddenly they just
Any excuse to put their
like
prices up, right?
I just feel they did it a little bit too fast.
Yeah.
Now, Albo's 1.2 million homes target, right? We need 240,000 homes per year, well behind it. And keep the comments going and the questions. I'm going to go through them after the presentation.
Right.
So this is what's happening with property at the moment. Dwelling approvals are still flat on the floor. Now, what needs to happen is approvals lead construction by 12 to 18 months, right? So what you're looking at here, these are the dwelling approvals in Australia. And as you can see, they're quite low. But not only that, you know how they lead to construction in 12 to 18 months? Well, we went through this before. It's taking longer than that to build now. So it's actually taking even longer than that for the approvals to come through and then actually build. And literally, they're stuck, right? So this is the thing. You can see builders are not starting to build, right? You know why?
Not enough
They don't,
profit.
they don't believe they can make money.
Yeah.
Margins are crushed, costs are up. So they're not going to start. So this pipeline I call it a pipe dream, right? So what's happening? We've got all these approvals and people are saying they're going to start building them, but they're not starting. This is a big issue.
Wow.
Yeah. So we're 28% short of completions in a single year, right? So these 28% are not even getting built.
They're non-existent.
Yep. So the red line is what we need, and the blue line is what we're building.
And look at the gap as of where it goes off to 2025. It's like it's getting bigger.
Yep, exactly. Now see that gap between the blue and the red
Yeah.
right at the end, because
Completions are
the
low.
blue line's approvals and the red is
Yep.
completions. And you can see now approvals have gone up, but completions have actually gone down,
Yes.
right? So that gap, right? That gap is money.
Mm.
Remember how we always talked that when there's a gap in the market, there's money. That gap pushes pressure on and really strong. Yep. So the house pipeline is bulging, but it's not shipping, right? Because you look at the dwelling pipeline and you're like, wow, there's a lot in the pipeline. There's a huge pipeline of approval projects, but they're stuck,
But what
right?
percentage is actually making it through to completion?
Not enough, right? And this is the problem.
Yeah.
They've got labor shortages,
Right.
finance shortages. They're trying to, because you need to finance the project. So approved is not the same as built, right? It
Obviously.
used to be, but now it's very different. And with all the builders going broke, people don't want to start. because they're not going to start unless they know they can make a profit. And I don't blame them. I mean,
Becoming too high risk almost.
you don't want them to start unless they're making a profit. Otherwise, imagine starting a build and then they go broke. No one wins out of that. So the last 18 months, nearly 100,000 fewer homes were built in the last
Wow.
18 months than needed.
That's
That's the
crazy.
shortage, right? So what's happening is the actual gap, how the Albanese government said, we are going to fix that gap and we're going to build more. It's actually getting worse every year, not getting better. Isn't that crazy?
They're
So it's
not fixing
wide.
anything.
So remember, I was talking about the housing shortage 10 years ago.
Yes.
And I was talking about 10 years ago, I was talking about housing shortage. And I was saying there's a housing shortage. You're going to make money out of property. Well, there's a shortage, but it's even bigger than what it was 10 years ago. So this is not my forecast. This is pulling the government's own numbers. So look at this: New South Wales, 32,000 shortfall; Victoria, 5,000; Queensland, 15,000; WA, 3,000; SA, 4,000; Tasmania, 3,000. ACT's done well, only 327 shortfall. So, but look at New South Wales, 56% of target completed.
Right. Wow.
They're at nearly half. Advertised rents had come back again, right? So what happened was we had a bit of a dip and now they're going up again. And rent growth is re-accelerating. So it hit 5%, 5.7% in March. So it's back. We had a little dip.
A bit of a
We had
lag for a while.
we had a little dip. It dipped down because what happens is it overcorrects. It went high,
Mhm.
then rent came down a little bit, had a little dip, and a lot of people were scared. And then now it's pumped back up again. And that's what happened.
It always bounces back. Yeah.
Vacancy rates are back at historic lows. So they went up, they went back down again, right? Because it's never just a one line. It's moving up and down as it goes.
Oh,
Because
well,
you
you
look at
see on the news about people living in their cars because they can't get a rental property. It's crazy.
well, there's generally nowhere for people to live,
I
right?
know.
And this government is not doing anything about it at all. What they're doing is just getting more people. And I'm going to show you about what's happening with immigration at the moment.
Crazy.
Rental listings have collapsed as well. Fewer listings, more applications, rising rents.
The perfect storm.
So this is not just a one-off though. This is a structural problem with Australia. We've got serious issues. And if the government doesn't fix them, we're going to have massive issues. And now what's happening is the government is actually looking at capping capital gains tax concessions to 33%, but also they're thinking of allowing you to negative gear two properties and then cutting it off at that.
Wow. We've
So,
been talking about
um,
that for ages, though.
yes, but in 5 weeks' time, there's going to be the budget. Now, if the government does this, which I think is severely, am I allowed to use the R word?
Say stupid.
No, no, really retrograde. I would not use that word, Christine. I'm joking. It's really silly. It's a silly billy of,
Use the S word. Silly.
yeah, silly. That's right.
Bad government. Bad.
Yep. So you look at this. So Adelaide and Perth, the tightest markets in Australia at the moment for rental listings, just really tight. But you can see this, every single place is down. Now look at this, net migration. It's pumping back up. So the upcoming federal budget is probably going to forecast net overseas migration above 300,000, up from 260 in the previous estimate. Every single one of these people needs a bed. More demand, less supply. The math's not complicated, is it? So you look at this, net overseas migration and net permanent and long-term arrivals is huge. Look at that red line. 500,000 people.
Off
Net
the
arrival.
chart.
500,000 people in 1 year.
It's literally off the grid.
That's like half an Adelaide, building half an Adelaide in 1 year.
That's insane.
Well, Adelaide's 100 years old. It took us 100 years to get to 1.2 million people.
It was
Right?
100 years. My God.
Right. And now it takes us 2 years, right?
Yeah.
Now, there's the number that politicians won't put in the headline. 494,000 arrivals in the year to January 2026. The highest January figure on record.
Wow.
Every one of them is a rental applicant first, a buyer second.
Mhm.
So what's going to happen is these people are going to come, they're going to rent. Then they're going to work, get a deposit, and they're going to start buying property. So It's going to be a long time before they buy property, unless for the rich ones, but that's going to affect the market even more. So it's got a double hit. So population growth versus the official forecast. So population growth, surprise, is running materially above the official forecast that underpin housing supply planning. In other words, the government is planning for a country that's already smaller than reality. The shortfall in supply is being calculated against the wrong denominator, right? So, so basically the baseline and actually what we're growing 15% higher than what we expected, right? So cumulative net new supply minus new demand under population growth scenarios over the housing accord period. What does this mean? A massive shortfall in supply, but not just in housing. There's a shortfall when it comes to housing, roads, infrastructure, water, power, everything, right? Because people need all those things as well. You can't just build a house and just move someone in. You need electricity, you need sewers, you need water,
Need
you
the
need,
infrastructure surrounding it all.
hospitals, roads, lights, everything. Yep. Australia's land values just hit 8.3 trillion. Yep. Land has grown 832% in 25 years. So you look at shares, super, other non-financial shares of what they're worth, deposits, dwellings, super. Look at super. Look how big super is. Super's pretty big when you think about it, right?
Massive.
I mean, because land's worth 8.5 trillion and super's worth 3.9, nearly $4 trillion. And what do you think's happening with that $4 trillion? Tell me.
A lot of people are investing it in property.
So see that second biggest graph, that blue graph? That's moving into orange. And then you got deposits, $1.74 trillion worth of deposits. Where's that going?
Into property.
Well, property, shares, crypto, all sorts of different things. But yeah, this is growth of household assets. So what people own. They own land, they own super, they own dwellings, they own deposits, they own shares, non-financial and other financial stuff. Yep, let's keep going. What it means for investors. Well, Sydney and Melbourne clearance rates are losing steam, right? So what's happening there? At the moment, Sydney and Melbourne are people that want to get involved buy in Sydney and Melbourne. Now is the dip in Sydney and Melbourne, right?
Right.
Because that's the window. What's happening is it's turning into a buyer's market. Because let's face it, Sydney and Melbourne are the two biggest markets in Australia, right? And when do you get involved in Sydney and Melbourne? When they're at 7 o'clock. Are they at 7? Some areas in Melbourne are at the moment, but I'm predicting that Sydney and Melbourne are going to be good buying over the next few years.
Okay, in certain suburbs, obviously.
And look, I've been talking against Sydney and Melbourne for a long time, haven't I?
Yeah.
Because they're overpriced. Things are changing now.
Yeah.
So listings are surging in Sydney and Melbourne. So basically, this could be a bit of a recalibration in some of the suburbs.
Interesting.
Right? And the fact of it is, me personally, I wouldn't mind buying one in Melbourne and one in Sydney over the next year or two. Great way to get back into the market. Because long term, it's always going to be a good market. And this is the two-speed market we're talking about. Brisbane, Adelaide, Perth have just been flying through. Sydney has got hardly any growth. Melbourne's had a negative growth, right?
Yeah, okay. I can see why you're saying Sydney and Melbourne's got opportunity.
Yes, because remember this graph 20 years ago was Sydney, Melbourne massive and
Yeah.
Brisbane, Adelaide, Perth were
It's like
nothing,
the
right?
opposite. Yeah, exactly.
Exactly. And what I do is I like to look at the gap between historically where they are, because this is showing the growth. So this is not good enough. You've got to look at the historical, what you've got to look at is you've got to look at prices for each suburb and you've got to compare it to other places and look at the long-term effect, the Michael
The
cycle
long-term
time.
average.
Yeah,
Yeah.
that's right. The 7.4 Perth doesn't mean anything, but it's got a little bit of a sign.
No, that makes sense.
Yeah, so they forecast Perth's going to go up 13%, Sydney's going to be -6. There you go.
Ooh, interesting.
Yeah, yields are getting smaller. That's why you got to be really careful where you buy now. The fact of it is, it's going to cost more and more to own an investment property in the short term. What does it mean for us? Well, let's keep going. The economy is contracting. Consumer confidence has collapsed, right? GDP growth is collapsing. Inflation is crushing real wages.
Mm.
Then I'm going to explain all this, what it really means, because it's important, very important. This one here, let me talk about this. Inflation is crushing real wages. What does that mean? This is an insidious one. This is one that you've got to be really careful about. This is so important. This is what makes people poor. This
Mm.
one thing here. Look at that graph. This is what makes people poor. So you look at our Australian real wages, how they kept going up, and then 2020 they peaked, and now they've just dropped off a cliff.
Wow.
And I'll explain what this means. Inflation is a very, very insidious thing because it's like boiling a frog, inflation. What happens is you get a frog, you know what they say, you get a frog, you put it in cold water, put it in the stove and slowly boil it and it doesn't realize and dies. That's what inflation does to you. What happens is prices slowly go up and your real wage is shrinking, your cash is shrinking, your savings are shrinking. And you don't really notice it day to day, but long term, everything shrinks. And that's the bad part, right?
Your wages got shrinkage.
Yes. And I'll tell you the way to stop this anyway. If you want to stop shrinkage, talk to George, Dr. George. I'll show you how to do it. Let's go.
That's because everything else is becoming more and more expensive, right?
Yes, now our hidden vulnerability is our fuel stockpiles. We don't have enough fuel, and we've
I
got
think
this
we've
Iran
discovered that
thing happening.
recently. Not so hidden anymore.
Yeah. What does this mean? Well, Australia is heading into recession. All the numbers are there, and it's going to be hard to not get into that recession next 90 days.
Right. Is it going to take the full 90 days or could it happen quicker?
Look, it lags. It's probably going to take 90 days. But what could happen? Iran, Israel, and America could create a peace, could create a ceasefire. What's happened recently? So Donald Trump has been going crazy about Iran on tweeting and doing sort of stuff on Truth Social. And basically, they've got a ceasefire, and Iran have given a 10-point plan, and he said it's workable. So if they agree on this 10-point plan and they create this ceasefire and open up the Strait of Hormuz, that could avoid all the inflation and the recession and everything else that we had to have, right? And basically, if they create peace now, it could be back to business as normal, literally. However, I doubt that's going to happen.
Everyone would love that, but it doesn't seem realistic somehow.
I doubt it's going to happen. What happens is it's very hard to limit wars. They've got a life of their own, and doesn't look like it's going to be hard for them to settle their differences. And unfortunately, it might drag on. You look at Iraq, that lasted 20 years, Afghanistan lasted 20 years. They take a long time, they take a lot of money. They're burning $1 billion a day in this war. It's crazy.
Wow.
The only people that win out of this war is the weapons manufacturers because now they've spent all their weapons and they need to do more. Funny, isn't it?
There's always a winner
Yeah.
somewhere.
Unfortunately. So if they create
What do they
peace,
say?
then
The house always wins.
yeah. So yeah, exactly. So I doubt it's going to last. I doubt they can get to it. I hope they do. I really would love to see peace and less people dying. And I would love to see everything go back to normal. But that probably won't happen. So what's going to happen instead? Well, this is the deal. This is going to be a reenactment of what's happening in COVID because COVID stopped supply and ramped up prices and created inflation, right? And what happens when this happens is the governments print money and actually cut rates. So what I predict is going to happen is we're going to have a slight dip in property prices, like we did in COVID. And you
Yeah.
won't if you don't pay attention, you'll miss it completely. You don't have to pay attention. And then we're going to have a ramp up again. It's going to go up. That's what's
It's
going to
going
happen.
to go back like a pendulum.
And it's going to come back. And the fact of it is, there's going to be some people sitting on the sidelines watching the news, and it's doom and gloom everywhere. It's terrible. It's scary. And then there's going to be the people that continue on and keep building their dream and keep working on replacing their income through property, one property at a time. And
Yeah.
they're going to be the winners out of this.
They're
And
going to make good money.
the losers are going to be people that are too scared to invest, or people that are going to try to time the market and go, okay, I'm going to wait till it totally crashes. I'm going to buy at the bottom, right? Those people will never buy anyway.
True.
And that's what's going to happen. So That's it. So let's have a look at our case study. Let's go through that, and then we're going to do Q&A.
Cool.
Okay. Okay. Daryl D. Hass from WA. So this is Daryl, and he's a greenbelt now. He's got 4 properties. And basically, he's had $646,000 worth of growth in 3 years. And these are the 3 deals that he did. He got one in Kurrabi, Queensland, settled in 2023, purchased for $485,000, $48,000 deposit, current value $792,000, capital growth $306,000 in 3 years. So this property made him $100,000 per year, right?
Wow.
Pretty cool, hey? You look at that Kurrabi crop property, right?
Should be
Now,
215,500.
yeah, per year, which is fantastic. So think about this. Most people don't even make $100,000 a year. And this guy, Daryl, what a legend. He joined our program, followed the system, had faith, and now he's making more in 1 year per year than most people work full time for. Because then you've got Byford in WA that settled in 2024. He purchased that for $481,000, deposit $48,000, current value $685,000. That's $200,000 in 2 years. That's another $100,000 per year. Then we've got Caboolture, settled in 2025, $564,000, $56,000 deposit, current value $701,000, and that's $137,000 a year. So this guy's a legend. He's done very, very well, and this is what investing's all about. It's about buying properly in the top 100, buying a property, and just taking the time to do it. So he's done very well. So that's really good to see. Good little thing. If Daryl's on at the moment, I'd love to talk to you. If you're on tonight, it'd be great. Shout out, and then let's go to our group. There he is.
Hey, Daryl in the house. Hello, your
Hi,
microphone's on
Daryl.
mute.
Is that better?
That's better, Daryl.
We
Yeah.
can hear you
Hello.
loud and clear.
Daryl, we're matching. Look at us.
Hey, how good's that?
And look, just letting everyone know, we did not call each other and ask each other what we're wearing tonight, did we?
No, we didn't.
Good, just in case. Anyway, Daryl,
Congratulations, Daryl.
Thank you. Yeah, thank you so much.
welcome. I'd love to hear about your journey and about your story. How did you end up joining Positive Property? How did you find this?
So, going back a few years now, I reached my 50s. I had no super. I've worked for myself my whole life, never put anything away for super. And I was actually getting a little bit worried and concerned about what I was going to do in my retirement years. And I started looking at property. I bought a unit over here in WA before I joined you guys. And it's actually worked out quite good for me now. That one's grown from, I paid 180 for that, and it's now worth over 500. So
Nice.
there's good growth on that as well. But I was just looking into property investments and that, listening to podcasts, and I heard about you guys. I thought, oh, I'll give you a go. And I think I spoke to Charmaine at first. And yeah, haven't looked back. I'm currently doing another one in Melbourne at the moment, in Cranbourne. So yeah, I'll have 4 or 5 under my belt by the time that one's done.
Wow.
And, yeah,
Okay, that's awesome. You've done well.
Yeah.
And look, the thing is, a lot of people in their 50s are like, is it too late for me? And obviously,
well, that's what I thought. I kept thinking, oh, I've left my run too late. And talking to Charmaine, and she's going, no, you'll be fine. And yeah, I just went for it, and best thing I ever did.
yeah. What was the hardest part?
Just having the confidence to be able to do it.
Okay. Yep. So the confidence is the hard part, and the rest was easier. Great. Excellent.
Yeah. Oh, yeah. Look, you guys, the whole team, David from the finance, Charmaine, everyone, they're just great. They've been there every step of the way to help me through it, and yeah, it's been easy.
Fantastic. Fantastic. What would you say to people that are thinking about investing in property and they're probably uncertain, especially at the moment with the world the way it's going?
Just do it. Just do it. The longer you wait, the further behind you fall.
Exactly. And that's the whole point, because the quicker you start and the more you start building that portfolio of yours.
Yeah, exactly.
Yep. And now you're getting your 5th property, so that's pretty good. So 5 properties you've done in how many years?
I think it's 5 years. It's actually 1 a year.
5 properties in 5
Yeah.
years.
Yeah.
That's pretty damn good. Excellent.
Yeah, I reckon too.
What's your goal? What's your goal? How many do you want to get?
My original goal was 10.
Yep.
But as I said, I'm in my late 50s now, just turned 59 actually.
Mhm.
So I think I'm going to have to call it quits here at 5 properties. I don't think I'll get any more as far as serviceability and that goes as well.
Yep. But 5's probably set you up pretty well.
Definitely, yeah.
Yep. Because you've got so much equity in them now. As the equity
Exactly.
grows, you're going to get more rent and it becomes more positive, and that's going to be quite a good little nest egg for you.
Exactly, yeah.
Excellent. Daryl, thank you for sharing.
Yeah, thanks,
I
guys.
appreciate you. I appreciate you. Thank you.
Thank you.
Christina, you're going to go through comments and questions. We're going to do Q&A.
All right, yes. Let's have a look, see. Where are we at now? So
The
from
blue
Lisa.
steel look. Yep, that's right. It is. I read one.
What about CGT that might come in? Okay, as long as you don't sell.
Yeah, look, they're looking at doing 33% discount on capital gains tax. What does that mean for you? Well, we don't normally sell anyway because we do the Elon Musk version of investing, where Elon Musk, he never pays tax because he
Never
keeps
tax.
taking the money out, right?
This is a
So-
great question from Kim. Should we pull out our equity now or wait for 3 months?
All right. Look, I always say, do it when you can, right? But your equity position is not going to change much in 3 months. That's the fact of it, right? So what happens is, when property prices dip, it doesn't affect all properties anyway. And a lot of the properties we've got in the top 100, a lot of them won't get affected. Some will, some won't. And it will be a blip because how long did it last in COVID? Most people didn't even know. Most people during COVID did not even realize that the property market dipped.
Yeah.
I'm curious, who realized, type in the chat. I'm very curious to who realized that the property market dipped during COVID. Okay, so far, no one? Yeah, a few people. Yep, there you go. So let's keep. Yep, okay. So a lot of our people knew. There you go. I'm very impressed.
Educated investors, of course. I got any high
Absolutely.
density unit success stories?
We don't really do high density units, so I don't have anything. But we got unit success stories. Yes.
Okay, just scrolling down to the
Oh,
next
someone said Lisa said only because you told us. Yep. There you go.
question.
Claudia said no such thing. Look, high density units. We don't do high density.
Oh, does Daryl get a freedom sword? Absolutely. We should organise that at the next members event.
Well, he does when he officially retires.
Yes.
So when he officially retires from work, from doing his 9 to 5 or whatever he's doing, then he gets the freedom sword. Absolutely. So yeah, great, Daryl. If you retire by October, you will get a freedom sword.
Go, Daryl. Congratulations, Daryl. A lot of love for Daryl, which is good to see.
That's
Fantastic.
beautiful, except we're not allowed to do freedom swords in Australia anymore.
We might have to replace it with a freedom trophy or something like that. Can't wait to retire. Yes. If not 2026, 2027. That's all the questions. Everything else was just comments. So I just scrolled to a
everything else
question.
comment. Okay. Yeah. So look, the replica sword though. It's a replica sword though. Yeah, I know it's a replica, but replicas are illegal as well. That's the fact of it.
They've just banned all
replica guns are illegal in Australia, and so are replica swords. A freedom Porsche. Yeah.
Keep dreaming, Matt.
You know what we could do? There's
freedom belt.
the UFC, those big gold belts.
The belts.
But some people might not like that. We'll see. Anyway, so look, that's the state of the nation. That's what's happening. We're going to keep everyone informed every week of what's happening. Next week, we've got a really good session, and we're going to be talking about interest rates. We're going to be talking about finance.
Okay.
And we're going to be talking about a really clever way. This is the one thing everyone should be doing, right? Everyone should be trying to reduce your interest rate at the moment. Who wants to reduce the interest rate?
Yeah, type in the chat.
Type in the chat and say, yay, who wants to reduce the interest rate?
Yes, me. Yes.
Yes. Okay. Type in the chat, who hates having to fill out miles and miles of paperwork to reduce your interest rate?
Me.
Okay. This is the next question. Imagine if you could reduce your interest rate without having to fill up too much paperwork at all.
Oh, yes, please.
and you didn't have to go through all that BS. That's what I'm currently doing myself to reduce my interest rates because I can't be bothered. And what I'm doing is I'm having a meeting with Carmine next Thursday, who he's running Wealth Street at the moment, and we're going to share with you how you can also do the same. So you have to come to next week. Next Thursday is going to be massive. It's going to be very exciting. It's going to be huge.
Awesome.
The banks are going to hate us. The banks are going to hate us, right? They hate it when we do this because every now and again I find a new way of cutting down rates and I bring it out to you. Because I remember when the rates went down, remember we did those letters, emailing all the banks and writing to them and calling them. That worked well. A lot of people reduced their rates and saved money. Now we've got a new way of doing it. There's a new product in the market that we're going to be using, and it's going to be very simple. I'm going through the process right now, and it's going to save me lots of money. And I like saving money because saving money is like making money. If I don't give it to the bank, the tax man wants it. Yes, 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 absolutely.
To help you keep it in your own pocket.
Yeah. Fixed rates, no. I don't like fixing rates. I'll tell you what, if you model fixing rates to variable rates, 80% of the time you win by having variable. So I don't fix it. Because the fixed rates, they've already calculated what they're doing in the future in those rates. That's the thing. So look, that's it for tonight. I want to thank everyone for coming along. It was one of those sessions we had to have, and this might be a recession that we have to have, but hopefully we avoid it. I'll keep you updated, and let's see in 90 days, are we going to have this recession or not? Either way, what you need to do is you need to follow your plan and buy the properties that you need to buy in order to build your portfolio. That's what it comes down to. You got to stick to the plan. You got to have discipline because it's the boring, basic work that you do as an investor.
Almost like sticking to a diet to get results. It's like stick to the plan.
Yeah, look, if you're a bodybuilder, what do you have to do? You just got to go to the gym every day and eat. See, funny enough, the number one thing in bodybuilding is eating.
Yeah. I think most people
look, Mins Baker, as someone who works at one of the big banks, I can tell you the banks always win when you're fixed. Absolutely, every time.
They do. It's rigged.
Yeah, that's right. That's why I don't fix because, and I know some really, really successful investors that have fixed in the past and they lost money because of it, and now they never fix. Yeah. So I just want to say, everyone, thank you. Lots of love from me and Christina, and I'll see you next Thursday night.
Thanks, guys. Have a great night. Bye.